All right, hello, Facebook. What a fabulous Friday it is, right? Financial Friday. And I tagged some very important people in this video who have really helped me on my journey to helping others to build their credit and their cash flow. First, I want to give a shout out to Kevin Young, my mentor, my sponsor who teaches me all of the strategies in this tax-free wealth book. Very intelligent young man that also helped teach others, right? Primarily in the Black and Brown community about cash flow strategies, W-4, adjusting that W-4, and claiming all the tax deductions that they need to claim for their business or deals, right? Whether you have your own business, whether you're a nonprofit, whether you're a pastor, whether you don't have a business idea, but you say, you know what, I'm an employee, and I need to tap into home-based business tax deductions so I can power my paycheck, right? And have an attempt to help others in this credit and cash flow industry at the same time, right? And so I want to talk about, I also want to thank Kiana Jenkins, right? My dear friend and classmate. She introduced me, she encouraged me through a lot of personal things as well. She always supports me. She made a very heartfelt and appreciative like meme or posts or promotional for my credit and cash flow services on my timeline today and her timeline. Mr. Rick Whitfield, who I'm about to meet in about 5 minutes to discuss marketing and getting this message out in Central Mississippi area. Thank you so much. And very not least, Miss Pastor Connie, right? We are doing a Beyond the Break, Capitalizing Your Credit and Cash Flow conference right here in the Jackson, Mississippi area, downtown Marriott on a Mid Street, and that will be Saturday, October the 27th, right? More details about that is coming soon. So if you want to register, I will be promoting as well as Pastor Connie and her ministry and her support on the Beyond the Break, Capitalizing Your Credit and Your Cash Flow conference right here in Jackson, Mississippi. That will be October the 27th from 10 a.m. to 3 p.m. at the Marriott. That's on a Mid Street. I think it's 200 Mid Street, Jackson, Mississippi. So we are very much looking forward to that. So next week you can learn more information and how to register about that soon. So I want to discuss the power of debt validation, right? When debt collectors call you, and why we don't understand. Thank you so much for the thumbs and the digital love. Thank you so much, Mr. Richard. And how a lot of people don't understand how debt validation works. I'm a teacher, right? So I'm always repeating because in the school system, we know that some things have to repeat third time before it's understood, right? Hello, Miss Evans. How are you on this Financial Friday? So first of all, I want to put a disclaimer out there. I'm not encouraging anyone not to pay their bills, not to pay their debts, right? But I'm going to explain to you how by law that if your debt has been purchased, right, by a debt collector, how to deal with that. So make sure if you're coming in, make sure you take time to hit the like button, right? Give me a thumbs up and share this on your timeline, right? Share this information on your timeline. That's the cost that I ask you all to do for free information and participation costs. Just two things, hit like and hit share, right? So come on in and hit like and hit share. So now we have, and I always reference this book, the Credit Secrets book, right? Thank you, Miss Evans. Yes, just watch and learn. I mean, this Credit Secret book, along with 2 other packages, can be purchased for like, I think $39. The website is thecreditsecretsbook.com, and that's secrets with the S. And I always encourage people, whether you want to my coaching and consulting to help you with your credit repair in addition to, but this is a book of knowledge that you need to obtain, right? I call it the almost the Bible secrets for credit understanding and enhancement. So I'm reading directly from page 42 that tells you, informs you about the Fair Debt Collection Practices Act, right? It explains the rules and the laws that collection agencies are required to abide by before they are able to collect any debts from you. Now, it's also the Fair Credit Reporting Act, right? The Fair Credit Reporting Act is how that information is reported to the three major credit bureaus: Experian, Equifax, TransUnion. So, according to the Fair Credit Reporting Act, Section 623A3, the law is for creditors and bank, and it's the responsibility of the furnitures or the original debtors that's reporting these collections to your credit account or even charge offs, right, to get the information. When we say original furniture, it means the original creditor, right? Who did you sign the contract with? Do they have your signature on blue ink? According to the Fair Debt Collection Practices Act, the FDCPA, right? These collection agencies must have that original contract as well before they can collect from you, right? If they buy your debt, they must show you the original debt. They must have all of these tools, all of these laws in place before you are obligated to pay them any fees without any recourse being submitted or done to you. And I tell people the first thing you need to do when a debt collection company is attempting to call you and collect is to, first of all, don't identify yourself, right? When they call you and say, am I speaking with Mr. or Mrs. X? You say, may I ask who's calling? And then they should respond, this is such and such from Franklin Collection or whatever collection agency, right? And once they respond, you say, I'm not aware of that debt, because you're not. You're not. You did not have any services or agreements with them. You're not aware that you owe them. I need you to send me something in the mail with the address you have on file. Do not provide the address in writing. So this is just a very small snippet of what a debt validation should consist of, what it should entail. First, you should ask them, you are asking for validation, right, and not verification, that they have competent evidence. Thank you so much for the digital love. Bearing your signature, showing that they had some type of contractual obligation to pay them, right? And then you quote the laws of the FCRA, the Fair Credit Reporting Act, along with the Fair Debt Collection Practices Act, the FDCPA. And you ask all of this in writing. And oftentimes, this one letter, this one dispute is what they would never contact you again. They will never ask for whatever the amount that they're saying they owe. Really, just take that one letter and knowing the language of the law and knowing your law and what you have rights to under the Fair Credit Reporting Act, as well as the Fair Debt Collection Practices Act, right? So that's that. That's how that letter, I mean, I'm telling you all, for under $40 can save you hundreds, right? Hundreds of dollars, and debt collectors, predatory debt collectors trying to collect from you, right? Knowledge is power, but applied knowledge is powerful, right? So you have to apply knowledge, but attain the knowledge is first. Second of all, the difference between cash flow and budgeting and why cash flow is more powerful. Not only do I teach people how to capitalize on their credit, but I also teach them how to capitalize on their cash flow. Now, what is cash flow? Cash flow is measured in time, right? It's showing you strategies and method to control how your money is flowing over time. So within 30 days, you won't be in negative cash flow. You won't be paying late fees because your money is not enough or leveraging over time to pay all the obligations that you have to pay bill-wise, credit-wise. Now, budgeting is important. I believe in a latte factor, and whatever you can reduce costs by all means. I'm not against that. But do you know that reducing your coffee costs or your cable, okay, once you send a letter, will the collection still appear in your credit report? Not if you send a letter in the early stages where you're disputing directly to the collectors, right? What happens is a lot of time we get these letters, we avoid them, we trash them, we shred them, we block the calls from the collection agencies. And then once they send us a letter in the mail, you have a 30-day window to respond. And we ignore it, right? We don't, because we don't know what to do in response to that. We don't know about our rights under Fair Credit Reporting Act and the Debt Collection Practices Act. And we trash it to the side, and then within 90 days, now you have a citation to appear in small claims court, right? And so once you send it directly to the collection agency in the early stages, no, it will not appear in your credit report. And actually, they will cease collecting from you because they do not have your original contract because you didn't enter into agreement with them, right? So that's a very good question. You all coming in, post any questions. I'll be happy to answer them, right? So any questions you may have, just post them, comment, and I'll be more than happy to address them. So that's a very good question, Ms. Evans. So cash flow is measured in time. Cash flow is also measured in how your money is flowing, right? So do you get your paycheck and then you're immediately taxed a third of your income? So a lot of people, when you ask them what's their biggest expense, it's not that coffee budget. It's not your cable budget. It's not even your mortgage. It's not even your vehicle note, right? Your biggest expense is that 1/3 of taxes that can be controlled that's being taken out of your paycheck. Do you know that you work for the government from January to April, right? You work for the government January to April. Why? Because you're paying them, yes, Miss Evans, in taxes. And your taxes are controllable just like the collections agencies are. You decide how much money, when you complete your W-4, when you tap into business expenses and you're able to record them accordingly, you're able to claim them accordingly, you turn your house now from a liability or the place that you're renting into an asset, because now a percentage of your utility bills that you pay can be used as a tax deduction, right? A percentage of your square footage of wherever you're living can be used as a tax deduction for business purposes. This internet, my phone bill that I pay, cellular bill that I pay, that I'm coming to you, is used as a tax deduction. Every 2 miles that I drive, right, for business use, these are things that I'm doing already in my lifestyle. But because you're just an employee and you don't have this business tax deduction software and program that I'm a part in. Thank you so much, Kiana. I send you a kiss. I really appreciate you. Now, these are just bills and expenses that you're paying, but you're not allowed to write them off as a tax deduction, right? If you look under your allowance on your W-4, under that you'll see a section. Just Google 2018 W-4. It should come in PDF. You will see that it's a deduction page. That deduction page, people, are for people who are business owners or a marketing director with the business that I'm affiliated with. And now all of these things that you're using in your everyday life, you begin to have tax write-offs, which means, in very simple terms, you have less taxes coming out of your paycheck, but more deductions to claim. Why is that important? Because once you give this government your money in forms of taxes throughout the year, they return it to you in the form of 0% interest, where you can be keeping more money into your pocket every day. So what else is affecting your tax flow besides taxes? Recently, Time Magazine had an article that the dollar right now is worth 37 cents. That's called inflation. What is inflation? Inflation is when business owners at any time can increase the prices of their services and their products. Whether you see it in gas, whether the daycare owners say, hey, we're up, our daycare expenses or prices are rising, right? Whether you see at the grocery stores, right, when merchants get ready to increase the price on your produce and your goods that you purchase from the grocery store. And so it doesn't matter if you're getting a pay raise from your job, because the prices are rising so high around you in form of inflation that you don't even see the impact of that pay raise, right? You don't even see the impact if you're married. Now you have a combined income, because inflation is rising at a higher rate than your paycheck on your job. So now you look at, okay, I'm dealing with a third of my taxes being taken out, right? That's a bigger hit than my mortgage or my vehicle note. Now inflation is hitting me. And now my income on my job cannot outpace inflation. Thank you so much for the digital love. Thank you so much. And now, because I don't have enough money coming in cash flow, and I'm getting assessed with late fees and late payment fees, and inflation is fighting me as well. Now I have to borrow money. And if your credit is not intact, at a higher interest rate, right, which is additional interest fees charged. And now I become in debt. Not in debt where I'm purchasing assets, right? But in debt where I'm purchasing liabilities just to make it. And so I tell people to look at my website, www.mycashflowispower.com, because that's more powerful than any budget that you can accumulate. And for $47, people, you can become a marketing director, right, with this home-based business that teaches you how to correctly fill out your W-4, right? I call it W-4 wealth. Teach you all the taxes you should claim. Kevin Young is tagged in his video. He's the tax professional, the tax pro. If you don't have a person that's doing your taxes, that's aware of these deductions and write-offs that you should claim, you still keep your child care tax credit, right? But these are more additions, because like I said, for every 2 miles you drive, if you had a stack of $1 bills on your passenger seat, every 2 miles you drive, you might as well throw out a $1 bill. You might as well throw out a $1 bill, right? Do you know when you're going out to eat and you're speaking business, that's a tax write-off. It can be with your friends, whether they want to join with you in this business or not. And you get a portion of that meal, because that's considered as marketing, as a tax write-off. But you need to know this, and you need to understand how it works. So again, that's how debt validation works. This is how cash flow strategies work. For $47, a one-time payment, you can sign up for the cash flow strategies. And then after that, it's just $34 a month, because you have to have the systems and the software to keep all records of your business tax deduction. So now you're an employee and an entrepreneur. But if you're already an entrepreneur, you're a pastor, you already have a business, and you want a record keeping system to add to this business, because home-based business that I'm in entitles you to more tax deductions, right, than just a brick and mortar business, right? So now you can be doing that business in addition to this business. And we also teach you how to accumulate business income. You can refer other people. You'll get business income. You can get residual income. And we also teach investing. This business is based out of Atlanta, Georgia. And so with the credit and cash flow, this is power. This is power. So, hey, this is my Financial Friday. Thank you all so much for joining in. I hope this helped you a lot. Please hit like and hit share. Share it on your timeline. And thank you all so much for the digital love. This is for better credit, learning how to capitalize your credit. And let me show you this real quick, and capitalize your cash flow. I just got this offer in the mail, right? 0% interest rate. Latanya Delos there. I mean, people will beg you to take their money at a 0% interest rate once you get your credit repair. And what can I do with that? I can take that money and I can buy a house. Thank you so much, Miss Evans. I can flip it. I'm on my way. As soon as I hit finish, Mr. Whitfield, I can purchase a home. I can rent it out. I can get cash flow coming in that way. But the first cash flow adjustment you should make is with your paycheck. Let me show you. I have these books by Grant Cardone. If you can see my table, I'm always reading something about credit. and cash flow enhancing strategies. And I have these books as well. Grant Cardone and Robert Kiyosaki are two of my favorites. The Dave Ramsey. I have Dave Ramsey's thing, but that approach didn't work for me. And what he teaches in his millionaire booklet, Mr. Whitfield, I will bring this to you, is that before you try to build a second stream of income, right? And you know in the Bible, in Ecclesiastes, you talk about multiple streams of income. Before you try to build a second stream of income, first know how to keep keep more of the first stream that you have. Because if you get more money, if you position yourself for more money, more income, and you don't know how to keep more of it, the higher your salary, the higher taxes you'll pay. So learn how to increase the current income that you have now. Mr. Whitfield, I'm on my way. Hey, Financial Friday. Make sure you hit like and hit share. Miss Coach Delotte, your queen of credit and cash flow coach.